Dear students, this is D. Prabakaran, Assistant Professor of Commerce, St. Joseph's College of Arts and Science, Autonomous, Cuddalore. In this video, we are going to see the topic subsidiary books. In accounting, initially, all the transactions are recorded in the form of journal entries. Once the journal entries has been recorded, the second step, the preparation of ledger account. The entries will be transferred from the journal to the ledger account. So this process, which involve lot of clerical work and it involve the time consuming work. In order to avoid this, in order to simplify this, the concept of subsidiary books are introduced. We are going to see what is meant by subsidiary books. Subsidiary books are the books that record the transaction which are similar in nature in an orderly manner. They are also known as special journal or day book. If you take it in a big institution, there are a lot of transactions taken place in each and every day. In order to record all these transaction in the form of journal entry and transferring the entry into the ledger account, it involves the lot of clerical work. So here it is to avoid it by the way of the subdividing the journal into various subsidiary journal or books is known as the subsidiary books. We are going to see what are the different types of the subsidiary books and what is the purpose for the preparation of the various types of subsidiary books. Here there are 7 types of subsidiary books, namely purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book, cash book, and journal proper. So these all are the different types of the subsidiary book. We are going to see each and every book with a proper format. We are moving to see the first one, purchase book. In purchase book, we are going to record only the credit purchase of goods, the cash purchase of goods, the cash or credit purchase of assets are not entered in this purchase book. The following is the pro forma of the purchase book. So here, this purchase book is prepared like a statement. In that, the first one, we are recorded the date. The second one, name of the supplier. The next column, LF, ledger, folio. Then inward invoice number, detail, amount. So this is the pro forma of the purchase book. The next one, we are going to see the sales book. The sales book is also known as day book, sales day book, sales journal, or sold book. Whereas in purchase book, we are recorded only the credit purchase of goods alone. We are ignored the cash purchase of goods, and cash and credit purchase of assets are not recorded in the purchase book. The same in the sales book, we are going to record only the credit sale of goods alone. The cash sales and cash and credit sale of assets are not recorded in this book. We are going to see the pro forma of the sales book. In the purchase book, we are mentioned the name of the supplier. In the sales book, here we are mentioning the name of the customer. Whereas in purchase book, there is a inward invoice number. In the sales book, there is the outward invoice number. Let we are going to see the next book is purchase return book. In purchase return book, we are going to record the purchase return of goods which are purchased for credit. So here the proforma, date, name of the supplier, LF, debit note, detail, then amount. The next one, the sales return book. In sales return book, we are going to record the return of goods from the customer. This book is also known as return invoice book. Here the proforma which contain date, name of the customer, ledger folio, credit note, detail, then amount. Then the next type of book is cash book. Here the cash book can be classified into three: single column cash book, double column cash book, and triple column cash book. In cash book, this book is prepared like a ledger account. It is prepared in a T format. In debit side, we are going to record all the cash receipts. In credit side, we are going to record all the cash payment. In this book, we are not going to record any credit transaction. The credit transactions are ignored in this book. We are going to record only the cash transaction in this book. The first one, single column cash book. The single column cash book is also known as simple column cash book. Here in debit side, date, receipt, cash amount. Similarly, in the credit side, date, payment, and cash amount. Then we moving to the next one, double or two column cash book. Whether it is a single column, whether it is a double column or triple column, whatever book we are prepared, in debit side we are going to record all the cash receipt. In credit side we are going to record all the cash payment. In double column cash book, date, receipt, cash, discount allowed. In credit side, which means in the payment side, date, payments, cash, discount received. Let we are moving to the triple column cash book. The triple column cash book is also known as three column cash book. In the three column cash book, what we are going to add in a single column cash book, we are recorded only there is a cash column. In a double column cash book, cash, discount allowed, cash, discount received. In a triple column cash book, cash, bank, discount allowed. In debit side, cash, bank, and discount received in the credit side of the cash book. We are going to see some keynote for preparing the triple column cash book. When we are preparing the triple column cash book, we need to see some of the important keynote. These keynotes that will be help to understand the problem and work out the problem in a very clear manner. The first one is contra entry. Here, contra means opposite. Here there are two entries are considered to be a contra entry. One is cash deposited into bank. The another one, cash withdrawn from bank for office use. If the cash deposited into bank, what will be the entry? Bank account debit to cash account. If the cash withdrawn from bank for office use, what will be the entry? Cash account debit to bank account. Here we can able to see in both entry there is a similarity. That's a cash account, bank account. Bank account and cash account. So if the entry that contain the cash and bank, that is called contra entry. Normally, if any transaction we are recorded in the cash book, it will be appear at any one of the place. If it is a cash received, we are recorded in receipt side. If it is a cash payment, it will be recorded in payment side. But here for the contra entry, there will be two effects. It will be recorded in payment side as well as the receipt side of the cash book. The second treatment, adjustment, check received. Here, if the check received means what? Cash received. Here we are going to see the two scenarios when the check are received. The first one, if the check received and deposited to the bank on the same day. For an example, I may receive a check from Morgan for rupees 10,000. So that check should be recorded on the same day, means the check amount that should be recorded in the bank column, in the debit side, which means the receipt side of the cash book in bank column directly. Then second scenario, if the check received and deposited into the bank on the next day, means the check amount should be recorded in the cash column of the cash book in the receipt side. So these are the two important keynote we need to understand when the problem is going to work out. The next one, the check dishonored. Check dishonored means what? The banker is refused to make the payment for the particular check. If the checks are dishonored or refused by the banker, means the check amount should be recorded in the cash book payment side in bank column. Then fourth keynote, the cash withdrawn from bank for personal or private use. If the cash is withdrawn for the private use, it will be recorded in the payment side of the cash book in the bank column. So these four are the important keynote that we are required to prepare the 3-column cash book. So in this video, we can able to understand what is meant by subsidiary book and what purpose it has been prepared and what are the different types of the subsidiary books. We are going to see one problem in 3-column cash book. Problem number 42, 3-column cash book. Enter the following transaction in 3-column cash book. The first transaction given, cash in hand. This is a 3-column cash book. We need to prepare in debit side, cash column, bank column, discount allowed. In credit side, cash column, bank column, and discount received. The first transaction, cash in hand, which means what? The opening balance of the cash amount. So it will be recorded in the debit side, which means the receipt side of the cash book. To balance brought down, the amount should be recorded in the cash column. Then second one, the balance at bank, the opening balance in bank, that also recorded. To balance brought down in the bank column. Then second one, cash sales, to sales in the debit side of the cash book and recorded the amount in the cash column. The next one, paid into bank. Paid into bank is a contra entry. It has double effect. Okay, it will be appear in receipt side as well as in the payment side. The next one, purchased stationery. Buy stationery in payment side. The next one, paid mortgage by check discount received. We are paying to Magesh in the form of check. So here the cash will be goes out in the form of check. So therefore in the credit side, by Magesh, the amount recorded in bank column, the discount received amount recorded in the discount received column. The next one, gave a check for cash purchase. By purchase, the amount recorded in the bank column. The next one, draw for personal use. By drawings, the amount recorded in cash column. Then 18th date transaction, received from Suresh a check for rupees 1,970 in full settlement of account for rupees 2,000 and deposited in bank. So we are receiving the check from Suresh. We are receiving the check from Suresh and we are deposited into the bank on the same day. So now it has to be recorded in the debit side to Suresh. The amount should be recorded directly in the bank column. Then the different amount 30 rupee discount allowed will be recorded in discount allowed column. The next transaction, draw from bank. This is the another contra entry. Cash account debit to bank account. It will be recorded in the both side. Then paid wages, by wages. Bank returned the check of Suresh dishonored. By Suresh, the check amount recorded in the bank column. Finally, on 31st, the bank charges as per the passbook. By bank charges, the amount record in the bank column. So this is a way to prepare the triple column or 3-column cash book. I hope you students are understanding the concept. Thank you.